The Chinese government just announced today that Chinese online population is now more than 500 million users. That is nearly twice the size of the online population here in the United States. And U.S. venture capitalists want in on that action. I'm here with David Chao of DCM. You guys have $2 billion under management, and of that recent funds, 40% of it is invested in China. Welcome to Bloomberg Television.
Hello, Emily.
You are on the board of RenRen. RenRen's stock has plummeted nearly 70% since it IPO'd, along with several other Chinese companies over the last few months. Do you think the Chinese internet bubble has popped?
Well, historically, Chinese stocks have always over-amplified what the market has been doing. So when the market, I'm talking about U.S. public markets, when they're up, Chinese stocks tend to be up higher. And then when it's down, it accentuates, only because I think China is still perceived as a little bit higher risk category than the average American public companies. And so, I think it's reflective of the U.S. public markets coming down. And again, as usual, it's being over-amplified.
Now, we've just learned that the SEC, along with the Department of Justice, is looking into accounting issues or fraudulent accounting issues across several Chinese companies. What exactly is going on here?
Well, most of those companies that SEC is investigating are reverse merged companies or reverse listed companies. And I think SEC is doing their regular job, just as they did with WorldCom and Enron, a few years back in the United States. When they smell companies that's not doing maybe a few things right, they go investigate, and that's their job.
There's no question, though, that Chinese companies are less transparent, at least from the perspective of the United States, than American companies. How do you guys, as investors, protect yourselves from the risks of investing in China?
I would say that the Chinese companies that are public and listed in the United States are just as transparent as another U.S. company that's public here, because they have to follow all the same guidelines and all the regulations that the U.S. market does. And in terms of private companies in China, there's clearly they are coming up the learning curve of the governance issues as a whole. And obviously we play a small role in that equation. And I think the Chinese entrepreneurs and management is learning day by day.
So with great risks come great rewards. Where do you see the biggest opportunities in China, given the kind of complicated environment?
Well, from my perspective, which is, we do venture capital, we leverage our Stanford network all around the world, and we invest in technology and internet companies. And from that perspective, what's very exciting about China, as you mentioned earlier in the show, China has 500 million internet users. That's twice the population of the United States almost. And there's a huge burgeoning rise of the middle class that China has never experienced, at least in the last 100 years. And what we're seeing is they're starting to spend money. And just as you and I buy something on Amazon, people will buy products on Dandang, for example, in China. And so that's a great opportunity, brand building for the middle class, and of course all the devices that they use.
Obviously now Chinese venture capital is freely flowing as well. How do you compete for the best deals, given the geographic location being based here in California? How do you get in on the best companies in China?
Well, first of all, we have a local team, and it's actually part of our global team. We have a team in China and Japan and the U.S., and we're all equals. And so from that perspective, we're no different from how we compete locally, and that's the best way to do it.
Okay. All right, David, we'll have to leave it there. David Chao of DCM, thanks for joining us here on Street Smart.